First news, headline, U.S.-Iran peace deal triggers massive market rally, crude falls and bulls return. The biggest story driving Dalal Street right now is the breakthrough peace framework between the United States and Iran. Investors rushed back into risk assets as fears of a prolonged geopolitical conflict eased. Falling crude oil prices became the biggest positive trigger for India, which imports most of its oil. Lower crude means reduced inflation pressure, a stronger rupee, and better profit margins for sectors like aviation, paints, chemicals, and consumer goods. The Sensex surged more than 700 points, while Nifty climbed above 23,800 and even crossed the 24,000 mark during trade. Market capitalization expanded sharply as traders covered bearish positions. Looking ahead to tomorrow, investors will closely watch whether crude continues to cool and whether global markets maintain their positive momentum. If the peace process progresses further, foreign investors may continue adding risk exposure to Indian equities.
Second news, headline, FII sentiment improves as rupee strengthens after oil shock reverses. The US-Iran breakthrough has created a second major market effect beyond equities. A fall in crude oil prices is helping the Indian rupee stabilize, reducing one of the biggest concerns for foreign investors. Analysts believe that easing macroeconomic stress has triggered short covering by foreign institutional investors, who had been cautious for months. A stronger rupee and lower oil bill improve India's economic outlook and can attract fresh overseas money into equities. However, experts are still warning investors not to chase expensive mid-cap and small-cap stocks aggressively because valuations remain elevated. Tomorrow's session could see close monitoring of FII flow data and currency movement. Continued foreign buying would be a strong signal that the recent rally is not just a short-term bounce, but the beginning of a broader market recovery.
Third news, headline, Bank Nifty explodes nearly 1,000 points as RBI support fuels banking rally. Banking stocks emerged as the biggest leadership group of the market rally. Bank Nifty surged nearly 1,000 points, with major lenders including HDFC Bank, IndusInd Bank, and Yes Bank posting strong gains. The rally was supported by easing geopolitical tensions, falling oil prices, and optimism around RBI measures, including support through FCNR-related initiatives. Traders who had built bearish positions in banking counters were forced to unwind those trades, adding fuel to the rally. Analysts say banking valuations remain attractive compared with several other sectors. If Bank Nifty continues leading from the front, it could provide the strength needed for Nifty to challenge higher resistance levels. For tomorrow, banks remain one of the most closely watched sectors and could determine whether the broader rally sustains.
Fourth news, headline, Nifty breakout signals fresh uptrend. Analysts eye 24,500 and beyond. Technical analysts are turning increasingly bullish after Nifty decisively reclaimed key resistance zones. The index has moved above the important 23,500 hurdle, and momentum indicators are improving rapidly. Several market experts now believe Nifty could target 24,000 to 24,500 in the coming phase, while some strategists expect a retest of earlier highs near 24,600. Traders are being advised to buy quality stocks on dips rather than chase intraday spikes. Key support zones remain around 23,100 to 23,300. The market has successfully broken out of a month-long sluggish phase, and sentiment is clearly shifting. For tomorrow, investors should monitor whether Nifty can hold above its breakout levels, because that would strengthen the case for another leg of upside.
Fifth news, headline, IT stocks rebound as global risk appetite returns. After facing heavy pressure recently, India's IT sector staged a strong comeback. Shares of TCS, Infosys, and Wipro moved higher as investors returned to technology stocks following the improvement in global sentiment. The sector had lost significant market value earlier amid uncertainty around international growth and risk assets. A stabilizing rupee, improving global cues, and reduced geopolitical anxiety are encouraging investors to revisit export-oriented businesses. Technology companies benefit when global economic concerns ease because corporate spending expectations improve. While IT is still sensitive to developments in the United States, the sector's rebound is being viewed as a positive sign for broader market participation. Tomorrow's focus will remain on whether buying interest continues in large-cap IT names after this sharp recovery.
Sixth news, headline, Realty, auto, and metal stocks lead sectoral charge. The market rally was broad-based, but some sectors clearly outperformed. Realty stocks emerged as the top gainers, with nearly 4% gains, followed by strong buying in automobile and metal counters. Falling oil prices boosted sentiment toward auto companies because lower fuel costs can support demand and improve consumer confidence. Metal stocks benefited from improving global risk appetite, while real estate counters gained on expectations that lower inflation pressure could eventually support interest rate-sensitive sectors. Interestingly, pharma was one of the few sectors that underperformed, as investors rotated money into higher-risk growth themes. If the bullish mood continues tomorrow, these cyclical sectors could remain in focus as traders hunt for momentum opportunities.
7th News. Headline: NSE IPO buzz intensifies. Exchange could enter Nifty Elite Club. One of the most discussed corporate developments is the possibility of the National Stock Exchange filing its IPO draft documents this week. Market participants are closely tracking the development because the exchange's implied valuation has climbed sharply in the unlisted market. If listed successfully, NSE could become one of India's largest listed companies and potentially find a place among the most influential names tracked by investors. The prospect of a high-profile IPO has generated excitement across the financial ecosystem, from brokers to institutional investors. While regulatory approvals remain important, the listing story could become a major talking point in the coming weeks. Tomorrow, investors will watch for any official updates related to the filing process. 8th News. Headline: NSE launches 11 new sectoral indices to expand passive investing. In a significant market structure development, NSE Indices has launched 11 new sectoral benchmarks, including indices focused on areas such as power and hospitals. This move expands sector-specific market coverage and supports the rapidly growing passive investment ecosystem in India. Fund managers now have more options for creating ETFs, index funds, and thematic products tied to specific sectors. While this may not move stock prices immediately, it can influence future investment flows and improve visibility for emerging sectors. As passive investing gains popularity among retail investors, these new indices could become important tools for tracking sector performance. Tomorrow, market participants may begin identifying companies likely to attract greater attention through these benchmark creations. 9th News. Headline: Market veterans turn bullish on banks, telecom, and capex themes. Several prominent market voices are becoming increasingly optimistic about India's medium-term outlook. Analysts and fund managers believe earnings recovery, infrastructure spending, lower interest rates, and improving economic conditions can support a stronger market trajectory over the next year. Banking remains the preferred sector for many experts, while telecom, capital goods, China Plus One beneficiaries, and selected technology companies are also attracting attention. Some forecasts even suggest Nifty could approach the 27,000 to 28,000 zone in the longer term if earnings growth accelerates. Although such targets are not immediate, they reflect improving confidence in India's growth story. Tomorrow, investors may continue positioning themselves in sectors expected to benefit from these long-term themes.
10th News. Headline: Valuation reset creates fresh buying opportunity in large-cap stocks. A less discussed but potentially important trend is emerging beneath the market surface. More than half of the major Nifty stocks are now trading at lower valuation multiples compared with 2023 levels. This correction happened because earnings growth slowed and investors became cautious amid macroeconomic uncertainty. Despite the recent rally, analysts believe several quality large-cap companies still offer more reasonable valuations than they did during the previous bull phase. That has created a more balanced risk-reward setup for long-term investors. Rather than chasing speculative names, many market participants are quietly accumulating fundamentally strong businesses. For tomorrow's trade, this valuation argument could continue attracting investors toward large-cap leaders instead of overheated pockets of the market.